Laura, good morning. Why now? I mean, things are headed down. Why do you think, at least for these stocks, this is a good price?
I think you need somewhere to hide. If you're required to be in equities right now, it feels like it's just a brutal market. And we really like Amazon's monopoly on the 15% wealthiest people on earth. They're hitting a record installed base every single quarter. Their revenue is rising, and they're hitting all-time high margins. As a company, 44% profit margins, $28 billion of cash last quarter, and they bought in $27 billion worth of shares. So you have a constant demand for shares, which is giving you downside protection. Buy Apple because they're buying in their own shares with all of their free cash flow and huge amount of free. They'll do 90 billion of free cash flow this year alone.
Yeah, I mean, I guess I get it. People were talking, for the last couple of years, cash is horrible. So it's horrible to hold cash. But think about it. If you had held cash, you'd be able to buy a lot more stocks right now, wouldn't you? So wasn't it worse?
It feels like 10 times more,
right?
The way the markets are going.
Right. So if you're looking for some place to hide, why not cash?
I guess, but a lot of funds by charter cannot hold cash because people won't pay them a fee to hold cash. So a lot of funds have to be completely invested in equities if they're an equity fund.
I get that, but we're talking to people, right? We're talking to people, too, on CNBC. So if you're allowed to hold cash because you're a real flesh and blood person, why not?
Okay, so my answer would be, as they fall, so can they rise. So I don't know when this darkness ends, but the day it ends, these stocks will be up the same 20%. They're, 10 to 20% they're falling every day. And it's going to be really hard to time that bounce.
Laura, it seems like a million years ago, but Netflix was a big print, especially since you'd long been calling for ad-supported service. The market's obviously come around to your point of view. It actually was relatively stable earlier this morning, was green. It's since now down about 2.5. But I wonder what would it take to get you to, I think you're now at a hold or a neutral. What would it take for you to get even more constructive after your recent upgrade?
Right. I need to see them adding sports, taking steps to add sports, and taking steps to add news, because what's going to happen next is we're going to get consolidation among these streamers. And some of their competitors, like Peacock, which is owned by Comcast, or like Paramount Plus, which is owned by CBS Paramount, those all have news and sports, and they have an ad-driven tier, and they have a free tier in some cases. So Netflix needs to catch up with some of its more innovative competitors because it established the streaming market, but a lot of times first mover advantage just become complacent, and that's what they become. They become the incumbent, they're complacent, and now there are 7 streaming services with deep pockets coming after them to take away their subscribers.
Laura, it's here. I want to dig in further to the streaming space. I know that you think that YouTube is the biggest winner, would be valued at some $300 billion if it was broken out. However, a big miss last quarter on revenue growth. And I wonder if you think that TikTok is a growing threat. We often talk about it as it relates to Meta, but it feels like it's having more of an effect on YouTube these days.
I agree with that. I also think that autos are still down, and movies, as you know, are just coming back. Finally, Doctor Strange did some good business this weekend. But the point is, YouTube does $44 billion of revenue a year. TikTok does $1 billion. So, I mean, YouTube is the streaming wars winner, and their growth rate is still 14%. It just should have been 25%. So I do really, and regulation is a real risk for all of these FANGs. In the case of Alphabet, we like regulation. We want them to break up YouTube from search. We think it would really help the values of both. So in the case of Alphabet, we think government regulations and breaking up that empire would actually be good for shareholder value, not bad.